All right, what's going on, everyone? Welcome back to another video. Today, I just wanted to go over basically the realities of the funding challenges and all going through the stats and stuff, because I think you can learn a lot. And we can extract some lessons from it and how you can actually use it to pass and not fail. Okay, so first of all, let's just look through on the Myforks funds stats right here. Okay, so 5,000. And this was for November. This is the most recent one that they have. Okay. So November, right? 5,718 people signed up, right? To get new live accounts. So they paid the money and took the challenges. Of that, only 10% passed phase one. Of the people that passed phase one, only 24% passed phase two. And of those, only 3% passed or actually reached their first profit split. Okay, so just to put that into context, that's 5,718 people that went for the challenge. 571 people passed the challenge. 137 passed phase two. Okay, 4 people got paid. Out of 5,718 people, 4 people got paid. Okay, those can be a little bit overwhelming statistics to see. But one thing that I really like about the Myforks funds data is that they have some takeaways here, which is really important. And so let's go over a couple and maybe these can help you out. Okay. And so when we look at it here, we see over 60% of traders didn't use a stop loss and have a high risk reward. So 60% of the people here, the 5,700, didn't use a stop loss. So if you want to avoid losing the challenge, step number one, use a stop loss, right? This is people that aren't okay with losing. They're letting their ego take over, where they take off their stop loss or they just never had one in the beginning. Okay. So step number one to pass is to use a stop loss. The traders who have made it to their 4th pay cycle all have a risk management strategy below 3% risk on any given day. So what does that mean? If you're risking 1% per trade, that means you can take 3 trades in the day. If you lose all 3, you're done. That's your day. Doesn't matter. You get off the computer, you don't look, right? So that's 1% risk for 3 trades, right? That's below 3% on any given day. So that can be a kind of a strategy that you can use. I would prefer, say, if you're doing with 0.5% risk, I would just keep that max risk per day at 1.5%. Okay. Keep it at 1.5%. So if you lose 1.5% in a day, well, then that's 3 trades, right? And then that tells you, okay, it's time to get off, right? I get off the computer. I'm done. I lost 1.5%, and that's my max limit for the day. Okay. So have that rule in place, your risk rule. You can see that the traders who've made it, who are actually getting paid, have this risk rule. So incorporate that into your plan, right? The profitable traders are in the market for less than 4 hours per day. Think about that. That means they're trading one session, essentially. They're trading one session. They have their model. They get in and they get out. That's it. 4 hours. That's done for the session. Boom. Less than, usually, right? Are less than 4 hours. So they're day trading. Interesting to note there. Most profitable traders don't hold overnight. Okay, so that's something important. They're in and out in the day. Usually, the majority of them. A trader who holds over the weekend has a 60% high chance of failing or losing the account. So what does that tell you? Don't hold over the weekend, right? Don't hold over the weekend. When the market is more volatile, more traders fail because of a lack of risk management discipline. And that makes sense, right? With number one here, with the fact that if 60% aren't using a stop loss, and then we get, a 30, 40 pip move or 50 pip move, just like we've been seeing lately, like 100 pip moves in the day, well, then you're absorbing all that, right? And there's no way you can survive without a stop loss in that case. Okay, so that makes sense. If volatility is prolonged, it is a bloodbath of epic proportions. I love that. Like, I think that's so funnily worded that they said that is a bloodbath of epic proportions. But volatility is both your friend and your enemy. If you know how to use it, then it is an amazing thing, because that's what day traders use, right? To get paid. If you have volatility of 100 pips this way, 100 pips this way, 100 pips this way, you could potentially catch every single move, right? You can potentially catch 300, 400 pips in the day based off of that high volatility. Now, the issue is if you don't know how to do it, and say you take a loss here, but then again, it rips through your stop, or you don't even have a stop and it rips up and it goes up 100 pips and you're done. You're immediately taken out, you lose, right? Comes back down, you lose again, and it takes you out a million times over. That's where you're going to struggle. And that's what it's saying here. If volatility is prolonged, people are getting absolutely slaughtered. And the way to avoid that is obviously have your strategy and execute on A+ setups, right? So you execute on A+ setups. But then when volatility is up, like it is now with all like the things that are going on fundamentally, this is an amazing time to take advantage of the market. It's just, you have to have your rules and your risk management absolutely locked in. Okay. Absolutely locked in. So there are 5 traders who are on their 8th payout on evaluation. 5 traders in total out of all the people, all the applicants in November and before that are on their 8th payout. Okay. What does that tell you? That majority of people can't sustain the account. Majority, a high majority. And it's not even majority. It's almost all. I would assume that in this time period, there was maybe 50,000 plus applicants, right? And only 5 of them are on their 8th payout. So they're the ones that are trading consistently month after month, 5 people, right? All of them trade conservatively, and make sure that they get paid. None of them risk more than 2% per trading day. And they stop when they've reached 4 to 8% in profit until the pay cycle has ended. Now, this is absolutely important. And it goes back to what I was saying before about how I would personally do the 0.5% and risk. Maybe I'd give myself 3 attempts to trade that day. If there were 3 setups, of course, that's not just me spamming 3 times. It's 3 times to trade that day. That means I'm risking on the day 1.5% max on the day. This is the max I'm willing to lose on a single day. And so you can see there, none of them risk more than 2% per trading day. So, right, that follows that rule. And they stop when they've reached 4 to 8% in profit. So meaning that you get your funded account, right? Say it's $100,000. Okay. So it's $100,000. And then what? You make 4%. Right? So you make $4,000 on that account, right? You make $4,000 on that account, but it's only the first week of the month. Well, guess what? These people that are actually sustaining these trades, they get that locked in, or they get up to 8% or whatever. It's typically, like they said, 4 to 8%. And then they're done on that account for that pay cycle. They wait until it ends. They pay themselves, and then they start again and do the exact same process. So they don't get greedy, right? They don't get greedy and try to keep compounding because they want to get to, they want to turn that $100,000 account into a $200,000 account. Majority of them, this is what they do. Okay. And all traders who received a record payout have lost their account within 3 weeks of the record payout due to excessive risk. Okay. So anyone's that have made, it's literally all of them. Every single trader who received a record payout lost their account within 3 weeks. Okay. The reason why is that greed cycle, right? You have this big winner, you make, I don't know, $30,000 on that account, you get hyped up. And so that when you take out your profits, right, your account goes back down to the starting point. And then you start taking excessive risk and you start losing your account. And then boom, you hit your stop out limit, and then you're done. You lost that account. Sure, you made that $30,000. But the goal is to sustain. The goal is to sustain. And you can see that as soon as you hit that record payout, so people that are risking more, they're trying to make as much money as possible, they lose the account. The ones that keep the account are going to be the consistent, conservative traders that have risk parameters in place and that pay themselves when they have to, okay? Or when they have the opportunity to do that. And so basically, let's just go through here. I wrote it down quickly. I just want to show you some of the lessons that we extracted here. Okay, so 60% of the traders don't use a stop loss, so they have a high risk of ruin. Use a stop loss, right? Below 3% risk any day. I prefer to do the 1.5% risk. I just think that that's easier. If you're risking 0.5, you give yourself 3 opportunities. If you lose 3 in a row on a single day, like I think it's a good time to just call it a day, or else the revenge trading starts to kick in, or at least for me. Okay, so 3. Most profitable traders are in and out, or are in the market for less than 4 hours a day. So trading one session, picking one session to trade from and sticking to it, and taking that trade, staying in the market for the duration of that trade, and then done. Or you trade 2 sessions, right? And you just have one trade during each session or something like that, right? So you have to see whatever suits your personality and your strategy, right? Of course, if you have a strategy where it requires longer than that, that's fine, but it's just showing you most profitable traders are in the market for less than 4 hours. So you should probably stick to something like that. No holding overnight or the weekend, right? That's fair. You're in and out during the day, more volatile, more failures due to bad risk management. So manage your risk. This is the most important part of your risk management right here. Okay. So risking this steady amount, having a cutoff limit, and then, payment stop out of 4 to 8%. So if you do get funded, what you want to do is you want to reach in and around this level, right? And then halt your trading for that account, trade another account, trade your personal account, trade whatever, but take that profit and pay yourself, especially for the first few times. Like maybe once it goes on, you can start looking to get higher and start risking more, whatever, but just know that there's going to be, again, a high chance of losing your account after you hit that major payout, right? And the reason is because that greed. If you can manage it, that's different, right? That's different. But if every single trader who received a record payout lost it within 3 weeks, I mean, that should tell you something, right? So these are I just wanted to go over the lessons that you can go over. And again, you shouldn't feel discouraged about the challenge stats. I think what you can do is instead learn from them. Use these as lessons, right? Use these lessons and incorporate them into your strategy on how you're going to approach the challenge now. Now, instead of going into the challenge, maybe with no stops, again, I don't know why you would, but you obviously aren't ready if you're doing that. But if, for example, your risk limit, I think that this is one of the most important things. If you're going to have a risk limit, I'm losing X amount per day and that's it. And I'm done. I'm done for the day, right? Have a set time to be trading in, right? You're going to be trading in NY session. Perfect. I'm trading just in NY, right? No holding overnight. Perfect. Removes that volatility because we don't know what's going to happen overnight, especially with spreads. We don't know what's going to happen over the weekend. We don't know if it's going to gap down 100 pips. Like we don't know, especially nowadays. And so I think, just be aware of these things, use them to your advantage and incorporate them into your plan before you go for the challenge. I think that this is going to be the most important part. Stay consistent and stay conservative. Like, again, these people that went for big ones, last year they got paid out, but they ended up losing the account, which is not sustained long-term. The people that are getting consistent money from the markets can sustain that long-term. And then they're happy, right? And you can load up more and more and more accounts and be consistent and keep stepping forward. And I think that that's the ultimate goal with these funded accounts. If you can lock in, say $400,000 and you're making consistently 4 to 8% per month, right? I mean, what else do you want, right? We'll just say in between and we'll say 5, right? So you're making $20,000 per month. You're making $20,000 per month consistently. And then that's your limit, right? Every month. If you hit between 4 and 8% or 5% in this case, that's it. You're done. You halt your trading. You trade your personal account. You just made 20K. Boom, done. Do that consistently, and you're living the dream, right? So, anyways, I just wanted to go on a little tangent here and talk about how to pass the Myforex funds and really everything, FTMO, all that. Just be smart with it. Be consistent. Be conservative and stick to your plan and stick to your risk parameters. That's it, right? Easier said than done, obviously, but that's it. All right, guys, have an amazing Saturday, amazing weekend. I'll chat to you guys tomorrow for the market breakdown of or the forecast for this coming week. All right. Cheers, guys. Have a great day.